for insight, we're joined by someone who specializes and invests specifically in this sector. It's David Berman. He's a hedge fund manager and founder of Durban Capital. He's with me here now on set. The last time you were here, David, you said this was an environment of retail nirvana. Forget double-digit unemployment. You thought the environment was actually good for retailers. Yeah. We got results today. What does this say to you now?
Well, we spoke about retail nirvana a few months ago, and I think this just proves it, that we're in retail nirvana. It wasn't just, our thesis wasn't just about great top line, although we felt that that would improve because of the easier comparisons. The primary thesis about retail nirvana is because operating margins are essentially going through the roof for this type of environment, for two primary reasons. And it's exactly what we're seeing in these numbers now, Margaret.
So today's numbers, and I believe we have a chart here of an index that your firm put together, DB Index, aggregating basically all the sales. What we learned today from the nation's biggest stores about what happened this season. You had said in September you're expecting maybe 0.5% growth out of the holiday season. Look at this chart now. We're up nearly 5%. Results?
Well, this chart is actually same-store sales.
Right.
So what I was talking about before, up 0.5 to 1% was total sales.
Right.
So that this is just same-store sales. Only part.
Does this, what we saw today, though, change that forecast?
No, I'd say we were pretty close. It's hard to know what the total number will be. Maybe it'll be a little bit higher than 0.5 to 1%. It's unclear because that's the total sales for all retailers. The NRF at that time were down 1%. So they've kind of come more in line with what we were saying 2 or 3 months ago. What has improved, is the same-store sales. The chart that you just put up, is that the same-store sales for this month, according to our DB Index, was up 4.7% same-store sales.
And now, that's excluding Walmart, though.
That's correct. That's correct. But if you exclude foreign exchange and gas, which we should, because Costco and TJ Maxx, for example, benefit a lot by that, then same-store sales were only up 2.5%. Nonetheless, it's still about the best same-store sale increase we've seen in 3 years.
Much is being made today because we're seeing consumer discretionary experiencing some gains in today's market. A lot has been said that, forecasts were low. It looks like most retailers beat them. I mean, should we still be thinking that perhaps there's a comeback here in the retail space? Is this about the consumer, or is this about something else?
Well, I think this is more about the consumer than something else, because analysts have had all year to raise numbers. Retailers started beating numbers, in the first and second quarter, and they kept on raising numbers, but they're still going even higher and higher. So in a sense, when I say retail nirvana, the numbers that were reported today were even better than the sort of increased expectations that analysts had throughout the month. I mean, you're seeing stocks that you mentioned earlier, Sears, Nordstrom's, knocking the cover off the ball, where sales were slightly better, but earnings were way better than expected.
When you're starting at zero, though, when you have a Christmas as tough as we did last year, you could look at any kind of improvement and say, wow, we need to breathe a sign of relief. Put this in context, though. I know you've been doing some work year over year looking at the percentage of sales and the growth rate. Give us some context to just how meaningful these gains are.
Well, to put it in perspective, okay, yes, are we up against easier comparisons, as you say? Absolutely. So, but nonetheless, to get a 4.7% same-store sale, or even ex-gas and Forex to get a 2.5% same-store sale, when you look at the trend line from what it was before, even looking at November, October, and the months before, it is still stronger than that. What really surprises me, it actually even exceeded my expectations for the month of December, because the inventories are so low. In fact, according to our inventory model, all retailers reported inventories and sales for the quarter at the end of October. Okay?
And I believe we have a chart of this, of some of the work that you've been doing with inventories here, because inventories are so key. And we know that retailers ended up last Christmas with way too much stuff in their stores.
That's correct.
They pulled back very sharply.
That's correct.
And look at this now. Tell me what this work signifies.
Well, this chart goes back about 10 years, and it looks at the sales growth rate versus the earnings growth rate, because obviously retail is seasonal, so you need to compare it year over year. And then it compares the sales growth rate to the earnings growth rate. And if you have a look at that chart, you'll see that it starts to get better, which means that, for example, in the last quarter that's just reported, total sales in the U.S. economy were flat. Total inventories were down 4%. 3 or 4%.
Wow.
That 3 or 4% spread is a really powerful spread.
So less in the store than almost they needed to sell.
That's correct. So the question is, how are you going to get those sales, some people are saying, if you don't even have the inventories?